Hey, Zeb, yeah, you're talking about, well, green arrows. There are not many here across Europe at the moment. Just taking a look at what's happening with the major markets. FTSE's down here in London, index of leading shares. 1% the fallback, 0.5% there for the DAX. It's these banks which are doing it here as well. And I tell you, it's Royal Bank of Scotland responsible. Earnings, one of the biggest reasons why we're seeing this fall away today. That stock was down as much as 16% this morning. The bank posting a first-half loss of $1.7 billion. That was quite a miss since analysts had expected net income. $1.8 billion there as well. That was a profit expected. In other words, RBS has set aside £12.5 billion to cover bad debts. That's broadly around about 70% of impairments and write-downs covered in the first half. The bank saying that impairments will stay at elevated levels, and that's at the moment really helping to push this share price down even further. Analysts say that while the earnings season until now has seen the majority come out ahead of estimates, we're still pretty volatile and we're still in for a rough ride, especially for the finance industry. Allianz, disappointing earnings where second quarter profit fell 16%, only added to some of the concerns out there. Some of the other drags on this market are the metals and mining companies. We've got Rio Tinto and BHP Billiton in the mix there. And why? Well, concerns about Chinese demand and prices. We've got copper, for example. It's been falling in the past few days. This is speculation surrounding this, that the recent gains that we have seen, especially in prices, of course, have outpaced the recovery that's been perceived in the global demand story. Now, with all those pressures, let's just recap as to where we stand now. We've got a FTSE down 44 points. We've got it down by 0.9%. And, of course, as you mentioned, John, we're awaiting those jobless claim numbers from your side of the water.